There are dozens of breakout strategies available to traders, but the one that you are about to learn is my personal favorite. This strategy has been responsible for some of my largest gains over the years. In this lesson, you will learn how to identify the setup, when to enter the market, as well as how to set targets. We will also take a look at several examples on different markets, so that you can start making consistent profits like this by the end of this video. Traders, our mission with this channel is to turn you pro as fast as possible, so be sure to subscribe and turn on the notification bell. It only takes a couple of seconds. Okay, tell me if this sounds familiar. You set your support and resistance lines, and wait for a breakout to happen. The price suddenly breaks through your support and you're extremely excited, because you're prepared for a huge drop in price. So you proceed to take a short position, and the price reverses and continues to move up. You're seeing your portfolio shrink, and you get confused. It happened to me as well at the beginning of my trading career. I spent months trying to understand what I was doing wrong, and finally found the answer. Since then, I have never fallen into this trap again. What's the secret, you might ask? Well, let's first start with the definition of a breakout. Breakout is when the price gets rejected from support and resistance multiple times before it breaks through one of these key levels. When this happens, the market usually keeps on moving in the same direction, forming a trend. The most logical entry point for this strategy is right here. However, you must remember that price breakouts have certain patterns. Some of them have a high probability of a breakout. Those are the flag, wedge, pennant, triangle and rectangle. It isn't necessary to remember their names because they all have one thing in common: the price consolidates for a while and then it breaks out of the range. Another secret to increasing the probability of a breakout is to add another confirmation, the momentum candle. These candles have a large body and no upper wick. The goal is to wait for such a candle to appear at the same time that the price breaks out of the range. This guarantees a successful entry 8 times out of 10. But what if I told you that there are indicators on TradingView that can automatically spot breakouts and momentum candles and their accuracy is much higher? Here's how they look. We will show you how to install them on your chart as well as what settings to use, at the end of this video. For now, let's understand how to take long and short trades with the help of these tools. As for the buy trade, wait for the price to break above the upper trend line. A breakout is confirmed when the candlestick crosses and closes above the line for the first time. At the same time, the candlestick that creates a breakout must be a bullish engulfing candle. You will see a green triangle printed below such a bar. If the conditions are not met, do not wait for the next breakout in the same direction again. Simply skip the trade, and wait for a new breakout in the opposite direction. If the rules are met, enter a buy trade at the close of the engulfing candlestick. The stop loss should be placed slightly below the most recent swing. The take profit is targeted at 2 times the risk, with the stop loss adjusted to the break-even point whenever the price reaches 1-to-1 risk to reward. For sell entries, do the opposite. Wait for the price to break below the lower trend line for the first time. The rules for short entry are met if the first candlestick that breaks below the line is a bearish engulfing. If this is not true, then skip all future breakouts to the downside. You can only consider taking long positions if the opportunity is there. But if the conditions are met, you can confidently place a sell order at the close of the trigger candle. Set the stop loss above the recent swing high and target 2 times the risk. Remember to adjust the stop loss the moment market reaches 1-to-1 risk reward. Okay, we're currently on a Bitcoin 5-minute time frame. Let's see how many successful entries we can find. As we can see, traders, this magic strategy has a really high success rate. I have not found a single losing trade so far. Let's now check the Forex market. Just take a look at how well the indicators find accurate trade entries. By the way, the time frame for this strategy should be between 1 and 15 minutes. It works perfectly well in busy sessions like Tokyo, New York, and London. Remember to not risk more than 2% of your account per trade with this setup. Also use no more than 20-to-1 leverage. Traders, I hope you enjoyed the strategy we shared with you today. Don't forget to show some love to our channel by liking this video. Now let me show you how you can install the indicators you see on my chart. First, log into TradingView and open the charts. Click on the Indicators tab and search for trend lines with breaks. Select this indicator by Lux Algo. Access its settings and make some minor adjustments. Add the Engulfing Candles tool by Runos to the second indicator. Keep its settings on default. Okay, the strategy is complete. Enjoy your profits.